We're at a crucial moment for the crypto ecosystem. Look at Bitcoin's price. We just generated a market gap on a key structure that we believe is being distributed. We identified a crucial structural break on April 13th. And this trend isn't unique to Bitcoin. We're seeing it across Ethereum, Cardano, Solana, and virtually the entire crypto ecosystem. Continuing with Bitcoin, we've been assessing this bearish impulse. Here, we had the W pattern. This was a weak Y, and we experienced a Z that seemed inclined to test the corrective patterns guideline. But now, we're considering the entire strong bearish impulse where we have the EW. This would be a weak Y, where we expect a Z at some point. This Z might seek liquidity from the entire distribution process. In other words, we often see that when smart money, whether accumulating or distributing, breaks its crick, we end up observing how before breaking a flat pattern, they enter the structure, in this case, to fulfill the Z, to seek liquidity before continuing the journey. At the same time, let's assess the following regarding this strong bullish impulse. What we see next is that we have AEW, a weakie that may want to eventually test its guideline with the excuse of seeking that Z, seeking liquidity, re-entering distribution, and also seeking profit from what could be a micro-bullish accumulation process to later offer us the macro-bearish says. Considering the S&P 500, remember we're in a macro-bullish channel where we see a Z in reference to this bearish impulse. Here's the W, this is a weak E, and all that follows is a Z in itself. And looking at the 4-hour time frame, we see that they've worked on this Z in a wedge format, so we've already identified the guideline of the Z post-wedge break, which has already been broken, generating what we believe is a black swan event. And now, what we're identifying regarding this bullish impulse where we have the W here, this is II. And here we've experienced an aggressive Z. We might have a bullish bias at least to try to approach its guideline. As you've seen in Bitcoin, we expect it to fail, which makes us think we might be in a formation process of bullish accumulation that might push the price upward at some point to test the Z guideline, ultimately turning all this into a macro distribution ready to break and head downward. Certainly, we're talking about the S&P 500, and here we won't talk about any kind of catastrophe unless we break key levels. And I mean by key levels nothing more and nothing less than the base of the macro bullish channel, which is at $4,219. I want to clarify that talking about being, so to speak, negative on the S&P 500 in the medium to long term is not synonymous with suggesting that a financial crisis is imminent, not by any means. You can see how far that dystopian scenario is because to see something similar, we would need to witness an aggressive structural break that generates a key black swan event indicating a negative stage for the global economy. As I'm saying this, it seems far off. Now, let me share with you what we're seeing on the Ethereum chart, how we cross-reference this information along with the charts of certain altcoins that frankly contribute depth to the analysis. But first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Continuing with the analysis of Ethereum, you know we came from an aggressive Z that targeted the second institutional target of a macro accumulation process where the price already broke the Z wedge to create its own guideline, which as I mentioned earlier, has already been breached. As I mentioned regarding this micro bearish impulse, we've already experienced its complex corrective pattern, the search for its Z that is now heading towards that guideline, and we speculate that this guideline won't be broken. We are now looking to find a macro Z, where we will relabel the corrective pattern, and that will help us find a Z that seeks liquidity within Ethereum's macro distribution. And ideally, the price shouldn't breach the defense zone that the smart money is defending here. The pursuit of this Z would ultimately target an institutional target of what this accumulation process would be. After finding the Z, we would then seek bearish continuation. Analyzing the Cardano chart, where we're already in the post-breakout of the macro bullish channel at this point, we notice that we might be forming a crick. I honestly wonder how it's possible that this breakout hasn't tested the origin of the breakout. But ultimately, all this would justify the idea that cryptos might have an upward move before seeking that continuation. In other words, and in this case, we could be talking perhaps about a simple corrective pattern where we have the W, and sooner rather than later, we go for a YOI whose intention is to complete a flat pattern. In other words, a redistribution referring to the most significant distribution to continue the decline. Ultimately, what we need to assess is the sequence of highs and lows. We come from a bull market where each high is higher than the previous one, where each low is higher than the previous one. And now the tables have turned, as you can see here in Cardano. It has completely reversed, where we already start to see that the highs are lower and the lows are lower. We are in a rotation. This is not subjective, it's objective. Here, I open a significant asterisk where we are, by no means saying that the market will definitely fall in the long term. Nobody knows that. But what we can analyze is the sequence of highs and lows, and the rotation of it is already unfolding. In the case of Solana, on its 4-hour time frame from a macro perspective, of course, we see a strong bullish party that already worked on a quite clear distribution where they generated a significant black swan event. They also worked on a complex corrective pattern where they went for a Z, which is now on its way to find its guideline. This is where we can also consider that we can assess a much larger bearish impulse, that this could be a W, and that we will go for a stronger I, either to find the origin of the breakout to form the I, which at the same time is the search for liquidity from the entire distribution process. Notice how well things fit together and the information for then to continue that fall. And as you're observing Polkadot on its 4-hour time frame, it's been working on a macro bullish channel that has generated a significant black swan event with a very aggressive structure that has been halted in a defensive zone, which we're going to give crucial importance to. Now let me explain why. Here, you'll see that concerning this bearish impulse, we've already obtained a simple corrective pattern that is heading towards its own guideline, based on what you're observing in the analysis of Bitcoin, Ethereum, the S&P 500, and the rest of the altcoins. We think it might have a short-term bullish journey before seeking the true movement. In other words, we can take all this bearish impulse, consider that we have AW here, and that we're going for a III that will visit the origin of the breakout before trying to look down. Clearly, there are many short-term nuances here that we can observe in smaller timeframes to evaluate what we think makes sense to happen in the short and immediate term, and how we should act according to the type of price behavior, also working on cross-analysis. In other words, analyzing multiple assets together to draw amplified conclusions. If you've liked this technical analysis, let me know in the comments. Also, like the video, subscribe to the channel, and click the bell icon so that YouTube notifies you of future posts. Good luck with your trading, and until next time.